Hello dear students, welcome to Devika's Commerce and Management Academy. Electricity companies, few problems we have seen. Today we'll see one problem related to the capital account and balance sheet together. I'm not giving you any pro forma of capital account, not required. Very simple, easy to remember. Capital account, debit side what do you write, credit side what do you write? If you know that, capital account is very easy. So in nutshell, in one word, I would say that capital account debit side we write all the fixed assets. Okay, debit side we write all the fixed assets. Credit side share capital and debentures. You got it now. Capital account, simple. So capital account we are writing debit side fixed assets. Okay, current assets comes in the balance sheet. After capital account, we'll be preparing the balance sheet. There it comes current assets. But here capital account only we are taking the fixed assets. Why? Fixed expense, fixed assets we purchase from the capital only. It's a capital expenditure. So that is the reason we are taking into the capital account. In the same way, capital account credit side we are writing share capital and debentures. Main sources na? Capital account share capital. Debentures also long term related any kind of sources are there, any kind of amount we are getting. So that is on the credit side. Debit side fixed assets means expenditure, purchasing the fixed asset. Debit side expenditure and credit side income, receipts, how much you got it, receipts credit, debit side fixed assets. Now you see the format already I have prepared. Receipts and expenditure on capital account. Receipts and expenditure on capital account as on so and so date, whatever date. Remember, capital account, whenever we are preparing particulars, that is expenditure on the debit side, receipts on the credit side, expenditure, receipts, just like profit and loss account. Expenditure, receipts. But amount, 3 columns we get on the debit side and also credit side, also 3 columns we are getting. First column is expenses up to, means beginning of the year. Expenses beginning of the year. Second column is expenses during the year. In between the year if you are purchasing anything. So that is expenses during the year. These two together it is total expenditure. Expenditure beginning of the year, during the year, total. In the same way here also. Receipts at the beginning of the year, during the year and total. These two together. This is capital account. Balance sheet is, simple. Assets, liabilities, amount. Whatever amounts we are taking into the receipts and expenditure on capital account, like fixed assets and capital, share capital and debentures, these items already we have taken here. So it doesn't comes once again in the balance sheet. Point to be noted, whatever we write on the expenditure side or receipt side, once again those items we don't take it into the balance sheet. Very important point. Am I clear? If you understand this is already. We can go for a problem. This is essay problem. Shall we see the problem? Problem is given on the desktop. You can note down or take a screenshot. And now let me read the problem first. The following balances are extracted from the books of Messrs. Flashlight Electric Company Limited. How many points are there? Total 9 points are there. Each and every point I'll read slowly and make you to understand. First one is fixed assets. Fixed assets what are there? Fixed assets expenditure up to 1/1/2004. Means beginning of the year fixed assets are given. Land and buildings 10 lakh, machinery 15 lakh. These two are fixed assets. Fixed assets what to do? Debit side of the capital account will write. Debit side of the capital account. Once again in the balance sheet? No. Next one. Additions during the year. Only for machinery there is an addition. Addition means we'll write it the first one in the first column. Additions will be during the year column is there. There you are going to write. And depreciation fund on machinery and building it is given machinery 3 lakh and building 1 lakh. So this depreciation fund always comes in the balance sheet liability. Next, authorized capital. Authorized capital is 50 lakh divided into equity shares of 100 each. 100 each means it comes to 50,000. 50,000 shares. 50 lakh divided by 100. You are getting 50,000. 50,000 shares are there. This is authorized. Authorized we don't touch. Next point you see. For fifth point. Issued and fully paid 20,000 equity shares of 100 each. Now issued is here, 20,000 equity shares we are issuing. This is required. Authorized is 50,000. But how much they are issuing? 20,000 only issuing. Issuing 100 rupees each. Including 2,500 equity shares issued during the year. During the year they have issued 2,500. Means total in the beginning of the year how much they have issued? 20,000 minus 2,500. That is 17,500. Beginning of the year they have issued. This 2,500 is during the year. This is equity share capital. Equity share capital, where do you write? Credit side of capital account. Balance sheet we don't write. Next, 7.5% debentures. Debentures also capital account credit side. 7.5% debentures, 10 lakh rupees secured by a charge on fixed assets. Debentures. Okay. Next, eighth point. Sundry creditors. Sundry creditors is a current liability. So it comes in the balance sheet liability side. Reserve fund. Reserve fund also, any funds we write it in the balance sheet liability side. So this is also balance sheet liability. Reserve fund investment. Reserve fund, that amount, some amount is invested. When you are investing, it's a asset, but it is not a fixed asset. So reserve fund investment, we take it into the balance sheet asset side. Market value is 5,25,000. They said we don't touch the market value. We take what is the investment amount spent. 5 lakh they spent. 5 lakh only we are going to touch. 5,25,000 ignore. Don't touch it. Next, eighth bit, stock, that is closing stock. Balance sheet asset. Sundry debtors, this is also balance sheet asset. Cash at bank, cash in hand. All the four items, stock, debtors, cash at bank, cash in hand, all are assets in the balance sheet, general balance sheet. Next, last one, profit and loss account. Profit and loss account credit, they said it is 2,02,500. Here you are not preparing revenue account and net revenue account. Net revenue account, whatever balance you are going to get, that amount is given to us. Okay, so this is net revenue account. Net revenue account, balancing amount. Net revenue amount, where do you write? Balance sheet liability side you will write. Net revenue balance amount, you will write it in the balance sheet liability side. Just like net profit in the profit and loss account. Profit and loss account, whenever we get net profit, what do? Balance sheet liability side you used to add to the capital. Now here this amount separately we are going to show it in the liability side as net revenue account. This is the profit and loss account of last year credit balance. Means credit side is more, debit side is less. It means net profit only. So we say simply net revenue account. This is balance sheet liability. Am I clear? Now slowly we'll work out the problem. Each and every item, already I have drawn the tables like receipts and expenditure on capital account. This is as on 31st December 2014 because they have started on 1st January 2004. Means they are following the calendar year. In balance sheet, columns, expenditure up to 1404 means beginning of the year, how much is there, and expenditure during the year, total expenditure. In the same way, receipts, beginning of the year, that is 1404, receipts during the year, and total receipts. Balance sheet is, each and every item will start. First one, fixed assets. Fixed assets, where do you write? Receipts and payment account, that is capital account. Debit side will write fixed assets. Okay. So fixed assets, land and building, to land and building. Beginning of the year it is given 10 lakh. In the same way here, machinery, Machinery is here 15 lakh. Next, additions during the year. Machinery additions to 3,50,000. Additions means here during the year. How much? 3,50,000. Next, depreciation fund, balance sheet liability. Here you are going to write directly. I'll write here. So some space I'll leave. Whatever amount we are going to get in the capital account, that is to be transferred. So we'll write first capital account, both the sides. We'll leave some space and then after that we can start. So what is this amount? Depreciation fund. Depreciation fund, machinery 3 lakh. Then building 1 lakh. After this, authorized capital 50 lakh divided into equity shares of 100 each. Authorized we don't touch. How much issued, that we need it. Now how much is issued is given in the next line. Issued and fully paid up 20,000 equity shares, 100 rupees each. So actually total issued is 20,000. 20,000 issued. 2,500 equity shares issued during the year. 2,500 is issued in the during the year, which is included in the 20,000. So beginning of the year, how much they have issued? 17,500. This is beginning of the year. So when we take the capital, capital is always credit side. Credit side we have capital issued fully paid up shares by equity shares. Assuming that equity shares only. Beginning of the year how much? 17,500 at the rate of 100 each. Okay, 17,500 at the rate 100. Beginning of the year 17500, two more zeros, it comes to 17,50,000. And during the year they have issued 2,500. So during the year means 2,500 at the rate of 100. This is this one and this is here. 2,500 and two more zeros. It is 2,50,000. Did you get this point? Very important. Actually issued is 20,000. In 20,000 during the year they have issued 2,500 is included. 2,500 issued during the year. If we exclude it, we are getting 17,500. 17,500 is beginning of the year. Beginning of the year means we are taking here 17,500 into 100. So this 2,500 is during the year now. So during the year is 2,500 into 100. It comes to here. So altogether it is 20 lakh. This total. Capital is over. Now next 7.5% debentures, 10 lakh rupees secured by a charge on fixed assets. Debentures. Debentures also credit side by debentures. Debentures how much? 10 lakh. Next, sundry creditors. Creditors will be balance sheet liability. Sundry creditors 2,50,000. Next one, reserve fund. Reserve fund is always here. Sundry creditors, we can write it openly because it comes under the depreciation fund. Sundry creditors. Reserve fund. Reserve fund is 5 lakh. Next, reserve fund investment. Investment is always asset. Here, we'll give a gap here. Reserve fund investment. How much is the investment? This is also 5 lakh. We don't take the market value. Next, stock, closing stock. Stock is 3,02,500. Sundry debtors asset 4,50,000. Sundry debtors. Then cash at bank 2 lakh, cash in hand 50,000. Cash at bank and cash in hand. Next, profit and loss account credit, which is nothing but the net revenue account will say. Where do we write? Always liability side, just like net profit. So, but we say it as a net revenue account when we prepare the electricity accounts. Okay, net revenue account will say how much? 2,02,500. This is net revenue account. Anything else we missed? Over. So what we do? We'll close the accounts first. Let's focus on the capital account. Capital account is here. Beginning of the year 10 lakh. During the year nothing is there. So total it is 10 lakh land and building. And here 15 lakh plus during the year 3 lakh 50,000. So it is 18 lakh 50,000. 18 lakh 50,000. In the same way here it already we have written, and debentures during the year nothing is there, so together it is same one, 10 lakh. What we'll do, just focus, we'll just close the total amount. We are not going to balance, we'll write the just total. It is 25 lakh. This is 3 lakh 50,000. And this is 28 lakh 50,000. And here it is 27 lakh 50,000. And this is 2 lakh 50,000. And this is 30 lakh. After this, we'll say which side, only we'll see the total, which side is more. Total, this is credit side is 30 lakh. And here it is 28 lakh 50,000. So which side is less? There it is less. So we'll write it on the debit side to balance in capital account. How much is the balance? 30 lakh minus 28 lakh 50,000 comes to 1 lakh 50,000. So we'll write here 1 lakh 50,000. Let me explain once again. When we prepared the capital account, receipts and expenditure on capital account, remember that always we have to just total it. We need not to balance it. This total is 25 lakh and here 3 lakh 50. Like this, we are just totaling it. After totaling, you see the total amount, total expenditure and total receipts. This you have to see. Which side is more? Here, receipt side is more. Expenditure side is less. How much it is? 1 lakh 50. So that you are writing wherever it is less. Debit side is less. So debit side you are writing the balancing figure. Balancing figure means 30 lakh minus 28 lakh 50,000. Which is 1 lakh 50,000. That you are writing on the debit side to balance in capital account. Just you are showing that capital account balance is this much only. Are you clear? Okay. If yes, now we'll go to the general balance sheet. General balance sheet, always remember receipt side, expenditure side, this total amount we are going to write here. And receipt side, This total 30 lakh is we are writing on the liability side. Cross opposite you remember. Receipts 30 lakh here liability side. And expenditure total asset side. How much is here? 28 lakh 50,000. So this will say it as a expenditure. Capital account expenditure. I kept the space for this amount only. Capital account expenditure. How much? This one only will write. Not beginning of the during the year. No, we want just total. Total expenditure is 28 lakh 50,000. 28 lakh 50,000. Okay. In the same way, receipts total is 30 lakh. 30 lakh we write it on the liability side. Okay. What do you say? Receipts. Capital account already we kept the heading receipts. There expenditure. Now here receipts. How much? 30 lakh. Now total up. You should get both the sides equal. 30 lakh plus 3 lakh, 33 lakh, 34 lakh, 34 plus 5, 39, 39 lakh. 39 lakh plus 2 lakh 50 plus 2 lakh 2,500, which comes to 43 lakh 52,500. 42 lakh 52,500. 43 sorry, 43 52,500. Same amount here also you have to get 43 52,500. If you want you can check it out. 28 plus 5 lakh 3 lakh 2,500. 4 lakh 50 means 6 lakh 50, 6 lakh 57 lakh we can write. 43 lakh 52,000. Yes, correct we are getting. Both the sides we are getting equal. That's all. If you understand maximum the first method, you are clear. Final accounts. Okay. So only what we have done, we learned today capital account how to prepare. Capital account, remember debit side, always expenditure. Expenditure means you are spending some amount. Capital expenditure means purchasing the fixed assets, land and building, machinery, something like that. Credit side we write the receipts. Receipts means how you are getting the sources. That's through the capital and also debentures. Only these two will write. Closing, did you understand? Just will total. Okay. And this amount, final amount will be transferring to the asset side. And this amount, liability side. And the balance sheet is, okay. Screenshot. If you understand this problem, take out your textbook. If they are asking any questions like this, prepare capital account. Okay, capital account and balance sheet. Those kind of problems you take it and work out. If or not, you can take the same problem also. Don't copy the answer. Problem is you are having. Work out and see. You'll have the confidence. In the next class, we will see 4 together. That is revenue account, net revenue account, capital account and balance sheet. Together we will work out one problem. That will give you more clarity. With that, we'll wind up the first method. Easy na? Nothing is tough. Only you need to practice, you have to understand. Stay connected, check out the playlist and whatever is useful, you use it. And don't forget to share this video. Practice well. Good luck.